You're watching The Money Show, your one-stop destination for all your personal finance queries. I'm Kavita Thaplial, and as usual, today on the show as well, we'll be talking about your investment strategies because if you have a financial portfolio, it has to be aligned with your financial goals for which you need specific investment strategies. And for that, we have our experts who guide you and tell you the right way to invest and the right kind of asset class or asset mix that you need to have in your portfolio. So we'll be answering all of those questions also on the show. We'll be giving a check to your portfolio as well. And we have a lot of, we have a Power Pack show today focusing on a lot of aspects of investments, an investment portfolio. Just in case you're watching the show live, you can send across your questions on our WhatsApp number, which is 865-797-4571. And the email ID is themoneyshow@etnow.tv, where you can send across your live questions. And let's begin the show, and today we'll be talking about a financial milestone that has made headlines across the investment world. Now, if we talk about the monthly SIPs numbers, in April, India recorded its highest ever SIP contribution, a staggering 26,632 crores, with active SIP accounts reaching to 8.38 crores. Now, this surge signals growing trust in mutual funds as a wealth building tool among Indian investors. But the question we ask over here is, what's actually driving this SIP revolution? Are investors becoming more mature and disciplined, or is it just a reflection of smarter fund strategies and better investor education also? To decode this trend and understand what it means for you, we are joined by someone who sits at the very heart of this movement. I have with me DP Singh, Deputy MD, Joint CEO, SBI Mutual Fund. Hi, good evening, and welcome to the show, sir. And all right, so let's just set the context, okay? And let's begin the conversation with a very important question. A record inflow in SIP numbers, once again, 26,600, it has crossed that number. What do you think are the key drivers behind this historic jump?
The basic reason behind it, the continuous investor education and the ease of doing business as well as the confidence. Actually, if you look at it, the number is not very high. Last year it was almost 26,000. This is 26,632. Almost at the same level for the last 6 months. This only tells that people who are putting money through SIP route, they are not concerned. They are continuously putting money. People are not actually reducing the number. They are not cancelling. Whatever numbers are being cancelled, equivalent numbers are coming also. So that speaks of the confidence level of the citizens at large.
Just for the viewers' context now, not only the SIP numbers, but, we've seen a significant rise in FlexiCap investment also, DP sir, 13th month where we've seen the inflows intact as far as FlexiCap category is concerned. And one more very important development is that the inflows in small and mid cap, that has remained stable, in between. There was a slight dip, but then again, this trend has caught up where we are seeing a good amount of inflow, at least a stable inflow in month-on-month basis as far as small and mid cap is concerned. So what are we looking at in terms of trend and maturities? Why do you think investors are still holding on to this small cap and mid cap category? And the confidence to, have stability in the portfolio comes from investing through a large cap or a flexi cap, which is pretty evident in this particular report this time.
So, Kavita, actually, you need to look at it in a perspective that, see, when we are looking at the overall numbers and looking at the numbers which are coming through SIPs, the SIP book for the flexi cap fund, followed by small cap and mid cap fund, is intact. And the most of the money net flows which we are seeing in this category are coming through SIP route only. And some money is coming through see some technical calls. Some of the funds are there like flexi cap funds. There are there are fund of funds of mutual fund schemes as well. Sometimes these are seen as a double counting, which is adjusted at the end of the day. So that those are also some of the things which we have to be kept in mind. But on overall, I will say that the overall what you call the confidence level is quite high. Confidence level is there. We'll see this month because this month's volatility is very high because of the obvious reasons which we are aware of. But I am sure the SIP numbers will continue to be the same. If you put it in perspective, and $3 billion money coming through SIP route, I think it's a huge success story for Indian capital market.
Sure. So, since we are talking to you, you're the largest AMC in the country. You've logged the maximum PIN codes. I just want to understand, are you seeing SIP growth primarily in metros, or is the trend picking up in tier 2 and tier 3 cities as well? Are we seeing the B30 doing better than the metros now?
No, Kavita, the problem is that as you said in the earlier part that total number of accounts have grown beyond 8 crores, but the fact of the matter is the number of new investors coming to the market is little sluggish. We need to work on that now so that we get more and more number of customers with the initiatives like Jan Nivesh, the initiatives like getting into more and more newer markets, so will get us more numbers. But today, if you look at your question on the whether it is coming in the T30 or B30, it's coming in the similar trend as it was. We are getting money from the bigger markets also, but definitely the smaller markets are contributing more than the bigger markets.
Now, since we are seeing a sense of maturity, in the retail investors, do you think the SIP stoppage numbers is likely to go down in the coming months, and it's not a major concern to you? These are the gross SIP numbers that we are looking at. And earlier also when I had a conversation with you, SIP discontinuation was not a major concern. It was more like a market trend or an investor mindset or reaction, according to you. It's a behavior pattern according to you. Does it really attributes to that even now?
Yeah, see, first thing, this amount which we are talking about, 26,000 crore, this is the net amount, this is not the gross amount. And the number of SIPs, when we are talking about the number of cancellations or seizures, are more in a particular channel, especially in DIV channels like Robos, where people put in, they start the SIPs and they can cancel the SIPs. Cancellation is as high as 30 to 40% on month-on-month basis. But at the same time, there are other channels who are getting in money. Every month we get the equivalent number or more number into this. So net numbers are not going down. The cancellations are not outpacing the new investors coming in. That's why we always look at the net positive. But today, majority of the investors are having, when there are good number of investors who are having 7 or 8 or 9 SAPs going on. The idea is to get more unique investors. Today we have in the whole industry have got around 5 crore investors. I mean, the challenge is to how to make this 8 crore SIP numbers converted into 8 crore unique investors investing through SIP mode. So that's the challenge. I think we as an industry with the help of MFI and very robust regulatory system, very friendly overall ecosystem, I think we should reach those numbers very soon.
Two strong inflow numbers that I really want to ask you about. See, sectoral inflow has been almost slightly above 2,000 crore versus 170 crores month on month. And overall inflows, even in arbitrage fund, that has come up to 12,000 crores, and record high inflows in ETFs. The amount is almost 19,000 crores. Now, what does this signify?
The 19,000 crore number is majority of this is in the Nifty 50 and BSE 30, and most of the money which has come is the institutional money. This is not the mass market retail money which is there. So that is one point which I will talk about the passive fund. But yes, the number vis-a-vis last month has been higher because the institutional investors, they know in the very beginning itself how much money they have to allocate for the equities in the current financial year. Sometimes people do take a call to put in money in the first month itself. So this is the first month of financial year, and we have seen this seasonality earlier as well, that the April is getting more passive money than the later months. So all these fiduciary capacity investments by provident funds and so on and so forth, that is contributing into this. But we'll have to see the numbers separately for the retail investors and the institutional investors to really comment upon this. The other point was on the sectoral funds. Sectoral funds again, when we look at the numbers, one you have to keep in mind that this month there was hardly any NFO, and most of the money now, the some of the major sectoral funds, so-called sectoral fund, are very much in the market, like banking and financial services fund or any other sectoral fund. Last month there was a unanimity, just like the way the things happen in the fixed income market. There was unanimity that the banking sector will do well. So naturally, that sector, wherever this was, when we got more money into the sector fund, and when we are looking at the money, we are looking at the overall all the sectors put together. We'll have to see separately which sector has got the maximum money. So that's another part. That number I've not seen as yet.
All right, sure. I think thank you so much, sir, for being on the show once again. Thank you for those incredible insights. It's clear that the SIP story is no longer just a trend, it's a financial revolution in the making. And thank you so much for being there for our viewers every time. Thank you.
Thank you, Kavita. Thank you so much.
All right, let's move on. And the other topic that we are going to be focusing on today is a pivotal choice for first time home buyers. Now, should you secure your home loan through a traditional bank or opt for a non banking financial company, which is NBFC. Now, banks are known for their good interest rates, stringent eligibility criteria, while NBFCs offer flexibility and faster processing times. But which is the right fit for your unique financial situation? Now, to provide clarity, we are joined by two experts. Now, a seasoned professional who understands the nuances of NBFCs, a certified financial planner who will shed light on the broader financial implications on your choice. So, let's delve into the pros and cons and help you make an informed decisions. I have with me Ratan Chaudhary, Business Head, Paisa Bazaar; Shweta Rajani, Head, Mutual Fund, Amrati Wealth. Hi, and welcome to the show, both of you. Ratan, let me just come to you first because, let's just help our viewers understand, how our NBFC is different from a traditional bank, in terms of offerings for home loans.
See, as far as banks are concerned, as rightly told by you, the rate of interest is lower, and traditional banks, the process might take a little longer compared to the NBFCs. So when it comes to NBFC, and what are the advantages are like, they are more flexible on rate of interest. They are competitive, might not be as competitive as banks, but they are competitive in these days. And for the new home buyers and the first time buyers that you are talking about, what is also important is that the eligibility criterion. So most of the time, the kind of quantum of loan that they are looking for, might be provided by an NBFC or an HFC as compared to a bank. Now, the traditional data also shows that the NTC, new to credit customers, who might also fall in this range of first time buyers, 42% of the loans are being done by NBFCs these days. Uh, and new to credit customers are 50% in the home loan buying category. So if you combine these, definitely the inclination should be more towards NBFC for a first time buyer uh, than a traditional bank or a PSB.
Ratan, one more question on the regulatory angle that I want to understand from you. Now, with evolving regulations, on NBFCs, how are NBFCs ensuring transparency, protecting borrowers' interest over here? What measures are in place to handle defaults or financial hardships, which are faced by borrowers?
See, as far as rules and regulations are concerned, earlier the NBFCs were, the HFCs were regulated by NHB, and 2019 onwards they are, being governed by RBI, they're regulated by RBI. So as far as rules and regulations concerned, they follow most of the guidelines, which a traditional bank would be following. How do they safeguard, a borrower's interest? As far as see, when a person is availing a loan, okay, uh, as far as due diligence on the property is concerned, he should that the although these banks are flexible, but their due diligence is at par with any of the banks, any of the traditional banks or the PSBs. So the customers interest is equally safeguarded whether or not he's availing a loan from an NBFC or a traditional bank.
Shweta, let's do a comparative analysis over here. And from a financial planning perspective, Shweta, how should a first time buyer decide between a bank and an NBFC for a home loan? You know, we are talking about long term financial implications. So, now what long term financial implications should be considered when choosing between the two of them?
Sure. So Kavita, two to three things here that one can keep in mind, keeping your long-term financial plan also in mind. First and foremost is the rate of interest that you would end up paying. Between a bank and an NBFC. Now, just to give you some idea that if you're going with a bank, the interest rate on your home loan may turn out to be somewhere around 8.75%. Whereas if you're going to an NBFC, then you'll end up paying it ranges anywhere between 8.5 to 10. So clearly a larger outflow is not so good from an interest rate standpoint, from a long-term standpoint, because what happens is in your earlier years you end up paying a higher interest component. So that is one thing that you should keep in mind. Second is what are your terms and conditions as far as foreclosure is concerned. If you want to early close your loan, what would be the fees that you would end up paying? Because a lot of the times it so happens that you would end up taking a 25-year-old loan, but as you grow, as you have more capability to pay up your EMIs, have bonuses coming in, you would want to foreclose it earlier. So doing this math in terms of what are your fees and what would make sense for you, whether you foreclose your loan or you invest that in a mutual fund and see how that is growing, or is the second math that one needs to keep in mind when you are combining a goal of purchasing a house with your long-term financial plan for wealth creation. So these are very quickly two things that one should consider.
Uh, Shweta, a credit score consideration. Now, this plays a major role, in getting a good interest rate. How does one credit scores influence a decision to approach a bank versus an NBFC? And are there strategies to improve credit worthiness before applying for a home loan?
Definitely. So, how do you improve your credit worthiness? And that will help you make your choice, because clearly banks are far more stringent as compared to an NBFC. And, they would look at what is your type of employment. Are you salaried? Are you self-employed? Second, what is the stability of your income coming in? That matters, and civil score or credit worthiness. So few things, very simple, basic things that you can do, which ensures you're improving that credit score is have a limited usage of credit card. And if you have credit cards, ensure that you make your payments on timely basis. So, that is definitely one thing that would improve your score. The amount of loans, how many times have you taken a loan? And what has been your repayment capability for that is another very basic thing, but it matters. What type of loan have you taken? These are, two, three things that will help you improve your score. So if you're planning to buy a house in the next 2, 3 years, keep a watch of it, keep a watch of your spending pattern. It tells you, these are small things which matter in terms of improving your score.
Ratan, see, NBFCs are known for quicker loan processing. I want to understand from you what factors contribute to this efficiency, and also how do NBFCs assess the creditworthiness, particularly for applicants with a limited credit history?
So there's a couple of things. First thing that I'll like to mention is that their policies are less stringent. What does that mean? Like you know they don't mandate that suppose a person is purchasing a property in his own or in her own name, then a single borrower just might qualify to take a loan. That might not be the norm with few of the banks where you might need a co-applicant, you might need a woman borrower as a co-applicant. So these are the things where maybe availing a loan from an NBFC uh, helps. How do they actually they are very very supportive as far as a borrower is concerned. Normally they don't take a call. So unlike the notion it's like if you're availing a loan from an NBFC, a person with a poor credit history or who might not be eligible for a loan, or who might be buying a property where the title is not clear, it might not go through. Where they normally take a call is, on the quantum of the loan, on faster processing. It's like, because the type of vendors that they have empaneled, they will be working on a very, very fast turnaround time. So these are the things, where they actually score over a traditional bank. uh, and these are the reasons where they score over a traditional bank, as far as faster processing is concerned, and being less stringent is being concerned.
All right, Shweta. Now, what risk should borrowers be aware, of when they're opting for an NBFC, and how can they actually mitigate them? I'm talking about the risk management over here. Also, in the current economic climate, how stable do you think NBFCs are compared to banks?
Today, if you go to see, if you compare the kind of regulations that NBFCs also have to follow, they're pretty much very similar to, I would say, banking, regulations that they have to follow. The audits that RBI conducts on them is also as I'd say stringent compared to what it was a few years back. We've been seeing the NPAs have been reducing for quite a good number of NBFCs. So, taking all this into consideration, I don't see too much of a risk when you are going with an NBFC. But yeah, like I said, some things that you have to check as a borrower is how are the fundamentals or the financials of the NBFC looking? What is the capital adequacy ratio? What has been the NPA, the gross NPA, net NPA, how smooth are their processes as far as but getting into the home loan, getting out of your or closing your home loans are concerned. Are there any hidden costs which are not there? Reading the fine print. These are a few things that one should keep in mind and can help you mitigate a lot of your risks or shocks that you may get later on. So yeah, quick 3-4 things that one should keep in mind.
All right, we can really go on discussing this topic, but then my time is up. But in a nutshell, choosing between a bank and an NBFC for your home loan is a decision that hinges on various factors: your financial health, credit history, urgency, and long-term financial goals. Now, banks may offer low interest rate stability, but NBFC provide flexibility and quicker access to funds, especially for those with non-traditional income sources. So, as always, assess your personal financial situation, consult with professionals, and make an informed choice that aligns with your home ownership dreams. Ratan, thank you so much for being on the show and helping our viewers with this very important decision and a financial goal of their life. Thank you so much. All right, but then we continue and we have Shweta who will be now answering our viewers' live financial portfolio queries. And Shweta, first in line, I will be taking Raman's question. I think you have the query with you as well. He needs 3 to 4 crores corporates in almost 15 years. He's doing SIP in Franklin, India, feeder Franklin, US, 10,000 amount over there. Parak Parekh Flexi Cap, 15,000. SBI Healthcare. Opportunity almost 7.5 thousand, and ICICI Pro Thematic Advantage Fund. He also wants to know your recommendation or opinion on HSBC Value Fund. I think he's doing an SIP 15,000 already in it. Nippon Multi-Cap 10,000 again. Tata Digital Fund 7.5, and UTI Large and Mid Cap 15,000. So that's the fund selection.
Sure. Ratan, I went through your portfolio. Now, in terms of the goal that you have, 4 crores with the amount of SIP you're doing, it's something that can be achieved very well. So no changes required there. But of course, if you can do a step up to your SIP, nothing like it. Coming to your scheme selection, I just have 2 observations here. One, you have an exposure to the Franklin US feeder. Now, given the situation where we are in, going forward for the next few years, India looks better placed compared to a lot of global markets, whether it is, economic growth. We are, India as a country is expected to be among the fastest growing, earnings, valuations, all that. If you look, I suggest being in a domestic equity fund for you that may give you a better return. Second is you have quite a few sector funds in your portfolio. Now, like, I've been always saying sector fund needs a lot more involvement by the investor, understanding these sectors and timing it very well, which does not happen with most of the investors. So I'd suggest you to stop your SIPs here. Third thing you asked on the HSBC Value Fund. Now, see, value as a style of investing, there are 2 categories which have similar style, value or contra. In looking at the historical record between value contra has been a better category than value, even though both of them have a similar style. So I suggest you to stop your SIP there too. You can instead go for an SBI contra fund in the portfolio. Few other funds that you can add is a Kotak Emerging, ICICI Pru Focus Equity, and an Invesco Small Cap Fund.
All right, Shweta, let's move on and let's take Deepak's question. And he wants you to recommend or guide him in terms of asset allocation for his future. And okay, so is it good to have mutual fund of the same AMC or not, you know? So he's given an example, maybe he has these funds, HDFC Nifty 50 index, and he's got a HDFC gold fund also. I'm just assuming because he doesn't want the transaction to be reflected in the bank account. Okay, I don't know how will you answer this question. How can the transaction not reflect in his bank account?
Perfect. So, Deepak, I'm just going to split it up into 2, 3 parts for you. Now, in terms of your asset allocation, if you have a longer term horizon, which means if you're looking at holding periods, which could be more than 10 years plus, we've seen, and you are willing to take a little risk on the portfolio, anywhere between a 70 to 80% equity works in that case. However, if you have, let's say, a 5-year kind of a horizon, then we've seen investors, also maintaining a 65, 70% equity in the portfolio, and that helps you, get a good risk-adjusted return on the portfolio. Now, second, honestly, if you ask me, I don't see there to be any harm if you have transactions in your bank account. If once in a while you are balancing or rebalancing your portfolio, so to have those 1-2 entries, but definitely it's not a good idea to have all your eggs in one basket. So I don't suggest you to have more than 25% allocation to a single fund house, however large the fund house is, 25, 30 max. Because even if these are different asset classes, you may have an equity fund, gold fund, a commodity-based fund, but still have a AMC level diversification, because you never know what hits a particular AMC. It could be regulatory risk, it could be anything. So therefore, and what also happens is, see, it's not like you're trading into a mutual fund portfolio. When you have a mutual fund portfolio, at best, you'll rebalance it once in a year. So once in a year, having a transaction is absolutely fine. And therefore, just my suggestion to you, if you're constructing a portfolio, you can go in for something like a quant large HDFC focus, Canara Robeco multi-cap, DSP small cap. These are few funds you can consider. Gold, you mentioned. If you need it for consumption purpose, having a 5-10% gold allocation is not bad. You can do it through any gold ETF.
All right. I think with that, it's time up on this particular for this particular segment. Also, Shweta, thank you so much for being on the show and helping our viewers with every aspect of their financial planning today. Thank you. All right, on that note, time to sign off, but I'm going to leave you with our WhatsApp number and email ID. Keep sending us your questions so that we can do your live financial planning on the show. Thank you so much for watching. Goodbye.